Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 3rd of June. Looking at cable, and this rally on cable has been really strong actually in the last few sessions. It's gone bursting through that resistance at 24.65 and it's continued to go higher. Positive candle yesterday, positive candle building today. Look at the momentum, 64, coming up 64 on that RSI. That has not been something that we've seen for a long while, dating back to the turn of the year. So it's an impressive recovery, and the momentum behind it is good. The question that I do still have, and I talked about this yesterday, is this these waves of moves that you get on sterling dollar. You've had sort of a week and a half of recovery, week and a half sell-off, week and a half of recovery, two and a half week sell-off. We're now into two and a half week recovery, and essentially we're still trading in this band. So the fact that the 26.45 level of resistance is still overhead is a concern. You've got the hourly chart, and you would start to look for potential reversal signals. And for that, I'm focusing initially on the 21-hour moving average. This is the basis of support pretty strongly actually in the last few sessions. If that starts to break down, you'd be asking some questions. MACD lines and RSI, are they beginning to form negative divergences? Certainly you would suggest that that could be the case on the MACD and stochastics. Not so much the RSI yet, but RSI falling under 50 would ask some questions as well. Under 40 you would ask serious questions. So you'd be looking at how the market responds around this initial support level, I think 25.65, but essentially 25.25, which was yesterday's intraday low before the market broke out again. So that becomes your higher low, first higher low really of note, 25.25. And if that gets broken with these momentum conditions all sort of turning a little bit more negative as well, then you'd be thinking that is profit-taking territory. You could start to see a corrective move once again. 26.45 is that key level of resistance, as I said earlier. And it needs to break out above that. And it's just sort of, it's okay. It's okay. The momentum is still positive, but it does need to push on again and essentially break out, because ultimately that key April resistance is significant on cable. And just always a little bit cautious about trading sterling long for too long in this environment, where obviously Brexit trading talks are still a key factor in how sterling is valued. Anyway, so I wish you good luck in your trading today. Click here to subscribe to our analysis videos on YouTube. Go to our website to sign up for our webinars, and you can also click to watch our Trader Talks videos to gain some top trading ideas, and we've just released another one.